Okay, let's dive right into this explainer. Today, we've got a really unique setup for you. We're basically going to sit in on a real-world CFA Level 1 study session. Now, if you're gearing up for your exams, you already know the equity module has this beast of a topic called industry analysis. For a lot of candidates, it just feels so dry, so heavy, literally overloaded with theory. But today, we're going to flip the script. We're transforming this whole topic into a dynamic battlefield strategy. We'll be following a fantastic discussion between a group of CFA aspirants, Amin, Ria, Karan, and their absolute rock star of a study group leader, Sumit. By the end of this explainer, you're going to see exactly why mastering this topic isn't just about passing a test. It's your ultimate strategic advantage. So here's our game plan for today. First, the top-down approach. Second, Porter's 5 forces. Third, the industry life cycle. Fourth, we'll do some live fire practice questions. And finally, number 5, some AI tools and pro tips.
Section 1, the top-down approach, mapping the terrain.
So, right off the bat, Aman is feeling completely overwhelmed by all the textbook theory. Understandable, right? But Sumit rescues him by setting up a rock-solid core framework. He defines industry analysis super simply. It is the process of evaluating an industry's structure, growth potential, and competitive dynamics to identify profitable investment opportunities. In fundamental CFA terms, this means before you can even think about evaluating a single isolated company, you absolutely must understand the broader environment it's fighting in. Honestly, you can't understand the soldier without understanding the battlefield.
The best way to think about this is like a giant funnel. You always start wide with economy analysis. What's the macro environment doing? Then, you narrow your focus down to industry analysis. How's a specific sector holding up? And only then, finally, do you drill down into company analysis. Think about it. If the overall economy is sinking and the industry is completely obsolete, even the best-run company is going to struggle. That top-down logic is absolutely crucial for the exam.
Moving on to Section 2, Porter's 5 forces, identifying the combatants.
Now, Sumit calls this the absolute heart of industry analysis. And let me tell you, it is easily one of the most highly testable areas on the CFA exam for sure. These are Porter's 5 forces: the threat of new entrants, the bargaining power of suppliers, the bargaining power of buyers, the threat of substitutes, and finally, industry rivalry. Don't just memorize this list. You really need to understand that these are the specific, dynamic factors that dictate exactly how competitive and therefore how profitable an industry truly is. When Ria asked what this framework actually tells us in the real world, Sumit had the perfect answer. It all boils down to a cause and effect relationship with profit margins. If an industry has high competition, like say buyers have way too much power or there are a million substitutes, those industry profits are going to get dragged down. But on the flip side, if you have strong entry barriers keeping new competitors out, the existing companies get to keep a much larger piece of the pie. Higher barriers equals higher profits. It's a direct mathematical relationship you definitely need to remember.
All right, Section 3, the industry life cycle, the terrain's evolution.
The battlefield doesn't just stay frozen in time, right? It changes. Every single industry goes through 4 distinct stages. First is embryonic. Think startup phase, super high risk, very low revenue. Then comes growth, which is all about rapid expansion. Next is the mature stage, where we see stable growth. And finally, the decline stage, marked by falling demand. During the study group, Karan pointed out that investors absolutely love the thrill of the growth stage. But Sumit wisely chimed in to say, hey, don't ignore mature industries. They might be boring, but they can provide excellent, highly stable returns for a really balanced portfolio. Now, beyond that life cycle, we've got to factor in external forces, regulatory shifts, new tech, and, huge for the CFA exam, economic sensitivity. You need to be able to contrast cyclical industries with defensive ones. Cyclical industries ride the massive waves of the overall economy, right up and down. Defensive industries, though, things like fast-moving consumer goods or FMCG, they hold steady no matter what. People are still going to buy toothpaste and groceries even if the economy is totally crashing.
Section 4, live fire practice questions, testing the theory.
Okay, time for a live fire drill. Let's see how this actually builds your exam readiness. We're going to hit some real CFA-style questions. Play along and see if you can nail the answers right alongside our study group. Question 1, a fantastic conceptual test. Which of the following industries is most likely to have high profitability? A, low barriers to entry. B, high threat of substitutes. C, strong barriers to entry. Or D, high competition. Lock in your guess?
During the session, Ria's logic here was spot on. She immediately remembered the core relationship we just talked about. She literally reasoned out loud, strong barriers mean fewer competitors. So, see?
And Sumit confirmed she hit the nail right on the head. Strong barriers to entry is correct. Fewer competitors mean the existing players have massive pricing power, which naturally leads straight to higher profitability.
Let's keep it rolling with question 2. This is a direct application of the 5 forces. If suppliers have high bargaining power, what happens? A. Industry profits increase. B. Industry profits decrease. C. No impact. Or D. Demand increases. Ask yourself, what's the real impact of a super powerful supplier base?
Karan nailed this one instantly. His logic? Flawless. He said if suppliers have all the power, they're just going to charge more for raw materials. Those higher costs squeeze the industry's overall margins, meaning overall profits go down. So B is absolutely correct.
Awesome. Let's keep this momentum going. Question 3 is a life cycle test. Which stage is characterized by slow growth and intense competition? Is it A, growth, B, embryonic, C, mature, or D, decline? Where exactly do we see that specific, frustrating combination? Eamon actually shook off his initial theory overload for this one and correctly guessed the mature stage. Think about it. The rapid expansion phase is over, so growth is slow, and because the overall pie isn't getting any bigger, the existing companies have to fight tooth and nail for market share. That creates some seriously intense competition. All right, finally, question 4. Watch out because this is a classic exam trap about economic sensitivity. Which industry is least sensitive to economic cycles? A. Automobile. B. Luxury goods. C. FMCG. Or D. Real estate. Read that carefully. It asks for the least sensitive. Ria completely sidestepped the trap. She recognized fast-moving consumer goods as a defensive industry. Think about it. Automobiles, luxury goods, real estate, those are highly cyclical. People immediately put off buying them when times get tough. But FMCG resists those economic downturns. Great job if you got that one right at home. Section 5. AI tools and pro tips. Advanced weaponry. Now that we've survived the live fire drill, let's gear you up with some modern weaponry. Make studying this stuff way more efficient. Karan made a great point in the group. Doing all this in-depth analysis sounds incredibly time-consuming, but Sumit pulled out a total game changer, AI. He explained that by plugging a specific prompt, like analyze Indian banking industry using Porter's 5 forces, into a tool like Microsoft Copilot, you get instant, highly structured insights. You can compare industries, spot trends, summarize giant reports in literally seconds. It's an unbelievable way to supercharge your revision. To wrap up their session, Sumit dropped some rapid-fire pro tips to maximize those exam scores. First, focus on the logic, not just rote memorization. Understand the why. Second, absolutely master Porter's 5 forces. They will show up, guaranteed. Third, link abstract concepts to real-world examples. It makes them sticky. Practice scenario-based questions because the CFA Institute loves testing your application skills. Keep those life cycle stages fresh in your head for easy points. And finally, use those AI tools for lightning-fast revision. And this epic closing thought from Sumit is exactly why mastering industry analysis is your ultimate strategic advantage. Great investors don't just pick companies, they understand the battlefield they operate in. As you keep grinding through your CFA journey, or even just managing your own portfolio, ask yourself this. Before you look at a single stock ticker, do you truly know the terrain it's fighting on? Thanks so much for joining me on this explainer. Keep studying hard, and we'll see you on the next one.